microphone to the program. Oh, I still cannot hear you. You try again. No. Are you using your cell phone? The laptop. Hold on, guys. We got some microphone issue, so.
Hi, Mr. Smith. I know you cannot speak now. I want to apologize for not turning on my camera. Usually, if it's just a personal meeting, I for sure will do that. I'm not ready to show my face to the public yet, so please pardon me for being on the background.
Yeah, I heard about that. That's cool, man.
Yeah, cool. Thank you.
I think it's working, but
okay, it's working now. Yeah, let's go.
Perfect.
It's not the correct microphone.
It's built up. It's built microphone, right? But yeah, but it's all good. We can hear you.
Okay, here we go. This is much better. Oh, guys, sorry for the delays.
All good. All good.
No problem.
Let me just pull up my notes and we'll be good to go.
That's gonna be exciting. We have 2 top traders in the live stream. And that's also really excited. The contest is already beginning.
Yes.
Some of the traders doing out of standing.
Yeah, they already booked some good profits. I haven't started yet.
I heard
FOMOing.
that someone already have the profit. The profit is like a 30% partial.
Yeah.
It's crazy. It's crazy. That's insane. Yeah. All right, let's go, guys.
Awesome. Let's go. Let me know when we're live.
Yeah, we are live now.
Awesome. So welcome, ladies and gentlemen, to the much anticipated live stream in anticipation of the trading contest, which has started today in collaboration with TradingLink and also Bitunix. So this is going to be an Ask Me Anything from myself, the CEO of TradingLink, alongside Kitkat, one of our top traders. So I'm very excited to kickstart this live stream and to celebrate the contest. So I'm going to start with a brief introduction about TradingLink, and then we'll jump into a little bit more to do with the contest itself, and we'll delve into the actual contest rules. So first of all, TradingLink is an incubation network aiming to find and nurture star traders by collaborating with the top crypto exchanges and forex brokers to host trading competitions and much, much more. Traders can either pass a testing phase or perform well in the trading contest to receive funding. And by the end of this year, TradingLink aims to build a huge offline trading contest in Hong Kong, Singapore, and Dubai, and launch with over 2,000 plus traders and track all of their performance in an offline event. So you can consider this almost like a huge trading floor to find some of the best traders out there and bring them into TradingLink, nurture them, and give them funding, which is very, very exciting. We have some huge plans at TradingLink. So now I'm going to delve into a little bit more about the actual contest rules themselves so that you guys know exactly what to do for the contest. So we have a few rules here. I'm going to go through 1 down to 4. So the first rule is each participant must open at least 1 trade per day. So this is a controversial rule. I know some of you aren't too happy with this, but that's the rules for the first contest, and we might tweak this down the line. So I advise all of you that are partaking in the contest, make sure that you open at least 1 trade per day to be eligible. So secondly, make sure that you're using no higher than a 20x leverage. Thirdly, risk management must keep the total position exposure below 30% of your total portfolio. So that means no more than 30% drawdown in total. And the fourth rule is profits are going to be split equally, and rankings are based on earnings to determine who advances to the next funding pool. So furthermore, we have some more competition rules. So the trading platform participants must use Bitunix mobile app for trading. So you must use their mobile app, while funders will monitor synchronously using the web interface. Number 2, starting capital. Each participant will start with $300. Losing 30% of this capital will indeed disqualify you and the participant from the competition, making strict risk management absolutely essential to succeed within the contest. And obviously, going back to the other rule that I mentioned, trading frequency, you are required as a participant to execute at least 1 trade per day on average to be eligible to actually win the contest. So now we're going to go into talking a little bit more about our guest, which I'm very excited to talk to. Indeed, Kitkat is a great trader, so I'm very interested to talk to him and see exactly how he's become so good of a trader. So I kindly ask you, Kitkat, can you please introduce yourself, a little bit about what you focus on and what makes you such an exceptional trader?
Thank you, Ms. Smith. Yeah. First of all, thank you very much for hosting this event. I know my community members, they are super excited. I know they're already starting and they're already booking profits. So it's a great start. Just a bit about myself. My name is Kitkat. Of course, that's not my real name. I started trading US stock in about 5 years ago, and then in early 2020, I switched to the crypto space just because of the high volatility, the great potential there. I was one of those earlier Dogecoin investors, had some fortune to book some good profit and have been trading crypto ever since. Right now, I am working full-time in a top 10 commodity trading company in the US, headquartered in Houston. It's primarily on energy trading. So that's my primary job, and that's my quant. I am a front desk quant, so quant researcher, quant trader. It's very different between commodity trading and crypto. Like in commodity, a lot of fundamental is playing. It comes into play. Crypto, this is all driven by hype. So I have to constantly switch between 2 mindsets on what to trade, how to decide my trading strategy. Back to what makes me a successful trader. I first don't even think I'm there yet. I'm being humble. In this trading business, we always need to humble ourselves. But I guess most importantly, discipline and following your trading strategy. Doing a lot of back testing to educate yourself about your strategy. That's the key, in my opinion. Yeah. High level summary.
Awesome. That's a great summary. And I would like to ask you a few questions leading on from this.
Sure.
Because firstly, you mentioned about trading quant and the differences between quant and commodities and crypto.
Yeah.
Would you like to delve into that a little bit more? I'm sure our audience would love to know the differences, because even me personally, I also have 10 years of trading experience, and I'm absolutely clueless when it comes to the institutional side of quant trading. So please tell us more.
Yeah. It's actually, I started this quant trading at this commodity firm like only earlier this year, so only like a few months of experience. But I'll share what I have seen so far. So commodity right now, I'm specifically referring to energy trading, natural gas and crude oil, all these kind of stuff. It's very highly driven by fundamental. Let's say temperature forecast. That's a huge fundamental factor for short-term price action for oil and gas. Like, as a technical trader, I'm so used to looking at the technical chart, finding resistance and these different technical setup. It doesn't work at all in these commodities. Like easily one forecast of extreme cold temperature can break all kind of resistance. So it's an eye opener, but it's pretty exciting. So really, at my current role, for the commodity quant trading, our quant role is more about quantamental. There's fundamental, but we use quant to investigate those. So we call this quantamental. We basically use a lot of scientific and AI machine learning tools to trying to predict what these fundamental factors could change in the short term. I can tell you one example. Like one of my friend, he's right now in Citadel commodity trading. They have very advanced algorithms that can even beat the forecast of the national weather forecast. So they are even just a few minutes step ahead of the public forecast. They can book tons of profit. So their profit is like easily millions of dollars. It's very, big size. But back to crypto and US stock, there's a lot of hype in this. Like market sentiment is very important. That directly affects the supply and demand. So technical is very useful in these markets, I would say. So that's probably the top difference. I'll stop here. Yeah.
Awesome. So just to recap, you're basically pointing out the differences, mostly fundamental and technical. There's a lot of underlying fundamental principles to trading quant. Whereas when you go into more of the crypto world, there are a lot of technicals that do play into looking for the trades, your strategy, etc. So I'd like to ask you more going into the crypto side of things, because I know you're obviously an exceptional crypto trader as well. Just for our audience that are watching, perhaps you could give them some advice. Let's say they're in their first 1 to 2 years of trading crypto. What are some things that you could help people in terms of building their strategy and trying to execute over a long period of time a profitable strategy in crypto? What would you say?
Yeah, that's a very good question. We have all been there, tears and sweats. So I think it's very important to not rush your entire trader's journey. Like we all kind of wanted to make big money in the first few years. We think we can beat the market, but in the end, we know we cannot. So now looking back, I think the best thing to do is really to delve into your own trading strategy. Like there are tons of different trading strategies you can be trend following. Maybe you want to do reversal, and some people like long, some people like short. So I think first find some trading strategy like that's suitable to your own mindset, your personality, and then identify the suitable market condition that's favorable to your trading style. Like market is ever changing. Like a few months ago, it's all bull market. Right now, it's consolidating. There's no strategy that can constantly book profits. So it's very important to find that suitable market condition. Actually, that's one of the three important components in our trading strategy. First one is identify the trading the market condition. But of course, as new traders, we all start to learn this and that technical setup, like double bottom, head and shoulder, those things. Those are not, I'm not saying these are not important, but they are useful in some period of time. Sometimes they don't work. Like that's the market condition driving the success of these. So first, of course, learn these fundamental skills, but also be mindful about the market condition. That's a more high level driving force for the entire market dynamics.
Awesome. That's such a great answer, I have to admit. And that's actually something that I tell my own community as well. It's like recently I was trading gold very aggressively because
Yeah.
gold, as we all know, follows Bitcoin. They're basically like brothers. They both tend to move up in tandem. They positively correlate. And I was aggressively trading gold, and I noticed that eventually gold will have to consolidate.
Yeah.
And by consolidate, typically we mean move sideways.
Right.
The price action constricts. It's less volatile. So if your strategy is booking lots of profits based on this huge volatility, you need to be able to notice when the market starts to become less volatile and move sideways.
Yeah.
Because then you're going to start trading into a chop, what we know as a chop, which is sideways price action, where you're likely going to run into, say, small profits, think the trade is going in your favor, and then it's going to come against you. And if you can't pick up on that sentiment and the change in the markets, you're probably going to overtrade. So sometimes, especially in crypto and commodities with these crazy swings that we see, sometimes you do need to take your foot off the gas and just relax a little bit. Oftentimes, the best trade is no trade at all if you can overcome the need to try to take too many positions in the market. So that's an excellent answer. And it's something that I've actually been trying to hone in on my own strategy recently as well. Is trying to figure out when the market is not moving up as much and to adjust my risk appetite and how aggressively that I'm trading to actually suit the market. So that's a great answer. So another thing that I would like to ask you, just leading on from that, I suppose, is what are some differences between, say, the traditional market, so trading indices, and more crypto? What are some differences there that you've noticed?
Oh yeah, the first obvious one is the volatility. Like a US stock, you don't see like 20% up or down in those large cap stocks. But in crypto, even Bitcoin can go up and down 5-10% sometimes. So that's definitely good and bad. Like good as traders, we love volatility, but for risk management, it's challenging. Of course, this market is also, crypto is like a 24 hours open. So it's initially when I entered this market, I was very happy. So I don't have to, like wake up early to just beat the New York open time. But I think like, okay, I can trade anytime I want. But then I realized it's not like that. The high volatility tend to occur during certain, period. And the most frustrating part is you can sometimes easily miss a very good opportunity. Like when I wake up, for example, this morning, Bitcoin reaches up to like 65,000. I was planning to sell my call option and I missed that opportunity. Now it's back. So that's very frustrating. I don't see a good way out other than developing a quant algorithm just to automating the strategy. Yeah,
that I definitely have to agree. Sometimes Bitcoin and commodities are so volatile that if you just don't take action for 1 hour, suddenly everything changes. True. And it's so different to the traditional markets. So you definitely have to prepare for that. Another question that I would like to ask basically is, for crypto trading, what are maybe 1 to 2 core principles that you can give people for them to, especially if they're beginner traders? Like I can give you my answer as well afterwards, and maybe we can compare. But 1 to 2 core principles that will really help people in their first 1 year of trading.
Yeah, I think like I'm just going to be very realistic here. Like to me, the top 1 principle is don't chase a big candle. Like, I mean, in US stock market, sometimes that worked. Like when Tesla is ripping, it just doesn't stop. So if you buy a call option, maybe it's already highly priced, but it can still triple easily. The continuity, like momentum is good in traditional like US stock market. In crypto, there's too many fake out. So if you cannot hold your FOMO emotion and you wanted to chase those big candles, most of the time you will suffer. So that's an experience I learned most from last few years. And based on that, we actually developed some good trading strategy just based on that. I mean, I guess top 2. So second one is, so first one is what to avoid. Second one is what to, take advantage of. So sometimes when these fake out happens, it always, I won't say it's always, it often indicates some reversal. Let's say if Bitcoin price, especially in a, let's say a daily uptrend, it does a fake out to the downside, that could mean a very good upside potential. Not just the space, but also time. It could be like very swift upside motion. So you take advantage of that and maybe build a strategy on top of that. That's helpful. Yeah.
Very good answer, definitely. And now one last question that I'd love to ask traders. How much do you really think these economic catalysts, such as the FOMC, and for those of you watching, if you don't know what the FOMC is, that's taking a look at the interest rates in the US economy. And then you've got other high impact economic news, such as the non-farm payroll, which looks at the jobs and how well the payroll is performing in the US.
Yeah.
Do you think that these actually have a great impact on crypto? And also, do you trade during these events?
Yeah.
Or what's your strategy?
Yeah, that's a very good question. And my answer might be very debatable. So I will just share my personal opinion. First, it really depends on either you are investing or trading. Investing, I mean like hold some coin for like 3-5 years. Trading is like just based on 1 hour chart, hold the position for maybe 1 or 2 days. So if we're talking about investing, not only for crypto, for every asset, we need to pay attention to this global economic, environment. If there's interest rate is going down, potentially there's a good benefit for all risky assets. So on that, yeah, definitely. But also keep in mind these events, they have a long-term effect. Don't expect, okay, this news is here, so tomorrow Bitcoin goes up 20%. Not gonna happen. The trend will start to build up gradually. I'm not really a big long-term investor, so to me, these news doesn't matter at all. For stocks, most of the time these news will happen after the trading hour, so it doesn't really matter that much. For crypto, you cannot avoid it. So often you see high volatility when these events happen, especially like FOMC meeting. My experience is that during these meetings, the price goes very randomly. It could go up a lot and then goes back to where it is. So basically, to me, I just avoid these. I don't trade these. I feel like it's so exhausting. I have my own strategy that's more stable, that I have confidence with. I have limited amount of time. I'd rather avoid these events, build up on my own existing strategy. Yeah, that's my thoughts.
That's a very, very good answer. And that's something for the audience as well. If you're new to trading and you see these big events such as the FOMC, they cause a lot of volatility for Bitcoin. You can see some crazy swings, high and low, in the matter of minutes. As soon as the chairman, Jerome Powell, opens his mouth, sometimes you see some crazy volatility.
Yeah.
But one thing that Kitkat mentioned, trying to trade these events is very exhausting.
Exactly.
And as a trader, you need to try to preserve your mental energy so that you can make correct decisions. And I found that, I've tried to trade the FOMC many times. And I think that overall, the best thing to do is just sit on your hands and wait to see where the trend settles, perhaps 10 hours afterwards or the following day. And then, as Kitkat mentioned, the trend will gradually start to increase or decrease based on that news. And don't expect to capitalize on these crazy swings, because that's oftentimes where you see people get liquidated or their stop loss orders get missed during these insane volatile times. So
exactly.
Amazing answer, Kitkat. I really appreciate you sharing some knowledge with everyone in the audience and even myself as well. It's much appreciated. So I think what we're going to do now is probably move on to opening up some questions into the audience and some more questions based towards myself as well. So there is someone that would like to take over from here, that would be greatly appreciated.
I got 4 questions from different channel, from YouTube channel and also X Space. So I will just share the questions into the text box right now, okay?
Sure, okay.
All right, be a minute. All right, these 4 questions from the YouTube channel and also X Space, the audience out there. This is that.
Awesome. So would you like me to read out the questions and answer them as well?
Oh, please, because they are watching from different channels right now.
Okay, that's fine. No worries. So the first question that I see, these are targeted towards myself. So you also have been trading for 10 years, Smith. If you had to start again, what are 3 things that you would focus more on? And that is a very good question. It was a similar question that I also asked to Kitkat as well. Basically, if you would go back to when you were a more newbie trader, what were some things that you would focus on? Now, in crypto in particular, there is a great community behind crypto. It can feel like it's a family at times, and it's a nice place to, park your attention. Running on from this, I would say find a good community of like-minded traders to share your analysis and compare your findings. Oftentimes, this will excel the speed in which you progress towards being profitable in the markets and seeing your development in crypto. If you're constantly sharing your thoughts and analysis and cross-referencing this with other people that are perhaps more experienced than you, or even starting out at the same time as you, they can share their knowledge and expertise, and you can learn from this. And that's how I found, when I first started trading crypto back in 2016, I found a community on Discord back then, and it was really, really helpful. I remember because I was so active, I was sharing analysis. I actually got promoted to an analyst role within a few months. I had been trading a few years prior to that as well in the stock market and Forex as well. So it really helped to excel the rate in which I learned specifically in crypto. So the second one, a tip that I would give to people, if I've been trading for 10 years, if you had to start again, what are 3 things you would focus on? So number 2, I would say understanding that risk to reward is everything. You can ultimately lose more trades than you win and still be in huge profit when operating on a positive risk to reward. Now, this is a concept that I know a lot of people struggle with. But for me, once I really grasped this concept, it was a pivotal time in my trading career. It really helped me to consolidate everything that I'd learned. So understanding risk reward. Now, simply it means a risk reward is you're looking to gain more than you're losing on every trade. So it could be, for example, a 1-to-2 ratio, a 1-to-2.5 ratio, which means you're looking to gain 2.5 times what you're risking. So that's referencing your take profit level and your stop loss level. Essentially, if you have a 1 to say 2.5 risk reward on every single trade, so you're risking say 30% to gain 75%, you can actually take 10 trades and only win 3 or 4 of those trades and be in huge profit. This is not small profits that we're talking about. You can be in huge profits. I know some traders personally that operate their strategy very aggressively towards risk to reward. Some of them are trading 1 to 10. So that means they're risking, 10% to gain 100% per trade. Think of it. You could lose 6 trades, win 1 trade, and you're in insane profit. Imagine that. So that's a concept that I think will help a lot of people if they're in their first year or 2 of trading and they're yet to discover the fact that you can lose more trades than you win and make insane profits, which moves on to the fact that in crypto in particular, you see many people claiming a 90% win rate, 80% win rate. Unfortunately, on social media, you have to apply a pinch of salt to when you see these claims, because I highly doubt that anyone is consistently operating a 90% win rate day in, day out, month in, month out. It's extremely unlikely. So I like to err on the side of actually, I'll flip that on its head and say my win rate sometimes is only 50%, 40%, and I'm making a lot of money still. So number 3, I would say try to never revenge trade. So if you hit stop loss on a trade for a specific pair, leave that trade alone and don't look for revenge. If you can just sleep on it, have a good night's rest, take yourself away from your trading setup, take yourself away from the stress, have a good night's sleep, go for a walk, and then come back and reassess. So don't revenge trade and don't chase your losses, because this is often times where I found myself in the biggest period of drawdown. So I hope that answers the question very well. I really, this is something that really I'm passionate about when it comes to trading, because I made a lot of mistakes in the beginning and I think it's normal. So number 2 I see is, what are some important factors traders should consider when building their own trading strategy? This is also a very, very good question. Let me just sip my tea. So I would say, guys, you should focus, again, coming back to risk reward, I don't mean to sound like a broken record. Just make sure that when you're building a trading strategy, your risk reward is positive. Now, there are some trading strategies where they operate just a neutral risk reward, but oftentimes, this is not sustainable. And also ask yourself these questions when you're building your strategy. What kind of trader are you? And how is your lifestyle going to fit into that? Because not everybody wants to sit at a desk for 10 to 12 hours a day, but some people do, especially when trading is new to you. It has this novelty around it. You do want to sit and trade all day. It's fun. I understand that. But not everyone has that luxury. Many people are busy. They have family lives. They have other stressful businesses and jobs. So ask yourself, how can your lifestyle fit into trading where it's not too stressful and suits you and your personality? So ask yourself, how many hours a day can you be looking at the market? And if the answer is really not that many at all, perhaps you should be doing, say, swing trading, aka holding positions for a few days at a time instead of aggressively scalping, which is typically, in and out of the market, sometimes within minutes, but occasionally it's more like hours at a time. So this requires a lot of your time and energy. And Kitkat made a very good point actually earlier into this live stream. Something to do with preserving your energy and your mental focus is actually really important. And the further I've gone down my trading career, I've realized that I have to be consciously aware of how much my energy is being zapped away from me, because then my decision making is not as good. And you really will see a correlation between, when you're low energy and wrong decisions you're making in the market. No one is perfect. So it's really important to focus on that. So the next question I see is top tips, for crypto trading that most traders overlook. Also a very good question. So I would say this is actually a good one that I wish somebody taught me. I wish someone said this to me when I was first starting out, or even actually, 3 to 4 years into trading. I wish someone told me this. You can actually track the flow of the economy. So you can track the US dollar. If you go onto TradingView, the US dollar is known as the Dixie or DXY. The Dixie is its nickname. You just type in DXY as you would type in BTC for Bitcoin, and you can load up a chart that shows you how the US dollar is performing. Now think of it, guys. What are we trading Bitcoin and Ethereum and altcoins against? We're trading it against the US dollar. So if you can have two charts side by side, one with the coin that you like to trade, say Ethereum, and then one with just the US dollar, sometimes I see the US dollar will move and then Ethereum will move. And it gives you that small edge in the market to see perhaps, if the US dollar telling us something here. And you can also then extrapolate this out further into, say, commodities like gold. So if I'm now watching gold, the US dollar, but I want to trade Ethereum, now I know that there is a positive correlation between Bitcoin and Ethereum and other commodities like gold and US oil. So if I see gold pumping like crazy for the New York Open, for example, but then Bitcoin is flat and the US dollar is flat, then I'm assuming there's a lagging correlation there between Bitcoin and gold. So I could actually snipe a trade on Bitcoin based on the fact that gold is pumping. And I've actually done this many times. It can be quite draining. It's a very full-on system to do, to have multiple charts open, to be following the US dollar, Bitcoin, gold, US oil. But if you're really serious about this, you can track the correlations and get an edge in the market. This is something that my strategy focuses on a lot, paired with the economic news that we spoke about earlier, going back to the FOMC interest rates, the strength in the GDP of the dollar, which the dollar is the powerhouse of the global economy. So even if you're trading Forex, the US dollar is the king of everything. It's the number one. And you can often find some really good setups based on having this understanding of the importance of the US dollar. So I hope that was useful to some of you, because I wish someone told me this at the start of my trading career. So another question that I see is, what is the biggest mistakes you think most traders make? I guess setting unrealistic expectations. I mentioned this earlier. Oftentimes in crypto and social media, unfortunately, you see a lot of people claiming to have a 90% win rate, 80% win rate. And look, I've also had an 80% win rate, maybe for a few weeks or 1 month at a time, when the market is very clearly trending. When it's only going up, of course, you just buy, and you feel like you're on top of the world. But this is not sustainable. So set some realistic expectations. If you go to an institutional trading floor, and this simply just means like a big bank, you know, on Wall Street, for example, and you tell them you've got a 90% win rate, they're going to laugh at you. No one believes you, because these guys that are making loads of money, they might have a 55% win rate, and that 5% is their edge. And they understand that that is a realistic expectation to have. But also talking about how much profit do you want to make every month. In crypto, you see these insane gains on meme coins. You see them going up 500% in a few days. But this is completely separate. You need to block out the noise. If you want to be a sustainable trader over the long run, you should be looking for maybe 5% a week is absolutely phenomenal. That's crazy. If you go to an institution again and you said you make 5% a week, wow, that's insane when it compounds.
Yes.
So have these more realistic expectations and don't be hunting, because in crypto, of course, I keep mentioning this, you see these insane meme coins, things going up like crazy, but you need to try and drown out the noise and set some realistic expectations. So those are the answers to the questions. And there's some more here coming in from the audience as well. How do you handle periods of high volatility in the crypto market? Well, I actually very much thrive on the high volatility. That's something that I look forward to. It's the periods of consolidation that we were mentioning earlier, when the market is less volatile. That's when you actually want to switch off and not be aggressively trading. So when there's high volatility, you need to ask yourself, what is the overlying trend? Are we going up? Are we going down? Then you can start to base your strategy around this. So if we're very clearly in a bull market, the market is trending up, you should be looking for, say, pullbacks to a moving average is a nice baseline to go off, so that you're not chasing green candles. So let's say the market is trending high volatility. How can you get into some nice setups? You can maybe put on a 200 EMA, and once the price revisits that moving average, then you can look for an entry, because you know that we're not overextended. The market has pulled back slightly, and then you can capitalize on potentially the continuation in that volatility. But you first off have to identify where the trend is heading. So another question is, what is your opinion on the current state of the crypto market and its future direction? So I'll answer this, and then I'll also give Kitkat the option to answer this question as well. So in my opinion, so the current state of crypto, so we have many fundamental catalysts unfolding. We had the Bitcoin halving, we had the Bitcoin ETF, we're coming up now for the Ethereum ETF. A bunch of news coming out from, say, Hong Kong and Asia are now openly now more inclined to, you know, have adoption of Bitcoin. So I think that that's a very positive thing for crypto. Now, I also would like to mention that the stock market has been creating new highs all the time, and there is a positive correlation between the stock market and also Bitcoin. And Bitcoin and crypto as a whole, it's what, a 2 trillion market cap. When you go into the stock market, it's a lot bigger. There's a ton more money flowing through the stock market, and also gold as well, than there is crypto. So I like to think crypto is the small brother of the stock market and also commodities. So when they're performing well and they're making new highs, you best believe that crypto is also going to follow that, because it's just riding the wave and the momentum, because there's such big volatility, such big gains being made that are transferring into crypto. And let's not even mention the censorship and how much of a positive impact the actual underlying principles of blockchain technology can have. We're just purely focusing on the technicals here. There's so many other fundamentals at play. You know, we had the Bitcoin halving, which comes into play, making it a lot more difficult for the miners, which in turn, you know, makes it more likely that Bitcoin is going to go up because the scarcity increases. And also another thing is, think about this in third world countries. There's places in South America, they have tyrannical governments. They have hyperinflation. And you think that you have inflation in the US and back in England as well. This is nothing compared to some of these third world countries are really feeling that hyperinflation. They can't even buy simple goods like milk and fruits and vegetables without actually using Bitcoin. So that, I think, will transfer into more countries as we move along. But that's just a brief answer to the question, because I'm sure I could talk about this all day. And I'll pass this question back over to Kitkat. And that was just, what is your opinion on the current state of the crypto market and its future direction?
Thank you, William. I enjoyed listening to all your sharing. It's very spot on. Yeah. So should I answer the number 7 question, current market, or all the above?
Yes, please.
Okay.
You can answer any other questions as well that you feel that you could give some good advice to people. Feel free.
Yeah, perfect. So actually, I think a lot of these questions, they have a lot in common. And William, you already touched on very key aspect of it. I'll just make some additions. So basically, for example, the first question, what would I have done differently, starting new? I think we're in this journey. Trading is a journey. Like, we're not just in here for 2 years and then we're out. that's different. We are trying to become a successful trader. It's the long run. What I think will be helpful is we want you to speed up the process in a quality way. So of course you have to master the fundamentals. What I mean fundamentals, like trading fundamentals, reading the charts. If you're not used to the candlestick, you are just so used to the lines. Maybe that's where you should start. Spend your time. That's unavoidable. Spend your time and learn those fundamental things. But from there, I think it's very important that we learn from the experienced traders, like William, you mentioned the community. That's a very helpful place to start with. In my earlier trading career, I signed up for so many trading courses. I joined the live trading classes with different traders. In the end, I part away from most of them because I realized, okay, their style is not what I'm looking for, but those are very useful experiences. So definitely learn from the experienced traders. That will speed up your process quite a lot. A community is also very helpful. That's where you can share strategies, learn things from like-minded people. It also helps speed up the process. One important thing maybe for new trader is preserve your capital. Like, that's something a little bit bummer to say, but when for your first 1-3 years, don't expect to make $1 million out of like $300. So preserve your capital, let it run longer so you can accumulate more experiences within that same amount of money. That's also important, especially for traders who don't have tons of money to spend on trading. That's important. But overall, like gradually, I think maybe at the 2-year, 3-year mark, start to build a, how do I call it, like trader's mindset. Like this is not just about, it's not about the technical setup. It's more about how do you learn about yourself, your trading strategy, your market, everything around you. Because when you trade, there's no way you can hide something. Like you are yourself against yourself. You cannot, if you're revenge trading, you are basically doing a deal versus yourself. It's hard to hide from it. So learn who you really are and learn more about your strategy, learn how, start to build intuition about how the market evolves, within months, years, short term, long term. That's very helpful. That's what I start to feel like that's the aspect that becomes more important over the recent years. So maybe that's something I can share. I think that covers like some of the questions about the mindset itself. Like looking back, the biggest loss I booked was doing revenge trading. Looking back, I'm an engineer. I'm a PhD, so I like study things. I think what happened is when there's a swift market change, when Bitcoin like drops down by like 10%, 20%, I was already on the wrong side of the market. I didn't realize that. I was trying to revenge trading. Really, I was just trying to recover some losses. But what I realized is the more I do, the more loss I get. So more losses. So really understand the market dynamics. Don't revenge trading, like William mentioned. Just walk away from the losing trade. That's really, really hard to do in principle. But we have to be disciplined. That's actually a key for a long-term profitable trader. gradually, like once we, in our maybe 4th year, 5th years mark, I'm just using my own experiences as example. Start to, you at this point, you probably have some good understanding of, okay, who you are, what you are good at, and probably you can book some good profits within certain amount of the during the market period. So just try to pick that great period for you, for your strategy, for yourself to shine, and then capture that moment, and then start to learn, walk away from when the market goes against you. So maybe do a lot of back testing to try to understand the market environment. And William, you mentioned a lot of good things about like the other market, like gold and US stock. These are actually very well connected. So I think as traders, we also want to pay attention to these markets. Not saying we need to trade them, but understand their connection. It's also helpful. I think, yeah, that's what I can share. It's really what you just already said. I'm just building on top of it. Yeah.
Excellent. Thank you so much, Kitkat. I would just like to touch on, before we move towards ending the AMA, which has been absolutely amazing, one thing that you mentioned that I also forgot to talk about is traders' intuition. Now, this does start to build up over time, say in your 3rd or 4th, or perhaps even 5th year of trading. So it's something further down the line that you start to focus on more, but it's always building up. And I tell people a little phrase: instead of trying to time the market, just focus on putting time into the market. And by that, I mean just, you don't always have to be trading or looking for opportunities, but if you're watching what the market is doing every day and paying attention, eventually you'll start to think, I recognize this. This happened before, so maybe I can then predict the outcome. And this is where your intuition starts to build up. You'll notice that traders that are further down their trading career, they're not drawing fancy lines everywhere. They're not overanalyzing their charts. They're actually relying a lot on their intuition and their past experiences, which kind of sits into your subconscious mind a little bit and just helps you as a navigating tool through the markets. So I think this has been an absolutely phenomenal AMA. Thank you so much to Kitkat for joining us, and for everyone that's been watching in the audience. It's been greatly appreciated, and I hope that we can get together soon and have another AMA with everyone. So this was to celebrate the start of the trading contest in collaboration of TradingLink and Bitunix. So I wish everyone the best of luck with the competition. Make sure you stick to the rules. I know that it's already unfolding and people are booking some great profit. So congratulations to everyone that's started. And I hope that you finish strong. And I'll see you guys soon. Thanks for tuning in.
Great. Thank you for having us. Thank you for having us. Thank you for having us.